Hey, this is John Hope Bryant, and this is Money and Wealth on the iHeart Radio Network and the Black Effect podcast platform. I am honored to bring to you a special segment breaking down contracts and taxes. This is something that is fundamental to your success in business, in life, even your personal life. Um, I'll cover all of this over the next 45 minutes or so. This was inspired in part by the artist Jelly Roll and a clip that he did on social media, which I then turned into a uh, piece of my Straight Talk Live series on my platforms where he talked about contracts in the music business. And he broke down how artists get in a bad spot. I'm not going to say taken advantage of because, as I will describe here, in most cases, they're not being actively taken advantage of. They're just not actively paying attention to the thing that matters most. It's the music business in that example. It's the business of music. And to think about it in any other ways is not to understand what you're doing. Or to quote my dear friend, my dearly departed friend, Quincy Jones, he says, if you think you're in the music business and you don't own music rights, publishing rights, licensing rights, some kind of rights, writing rights, you're actually not in the music business. You're a temporary performer. Drop the mic statement by Quincy Jones. So Jelly Roll goes into this thing, and you can look at it, the full clip on my uh, social media platforms at John Bryan everywhere, wherever platform you choose to focus on. Instagram's probably easier. I break this down in great detail, but the key part of this is he explains that when you owe $1 million, you've been given an advance. Let me make this clear. You've been given an advance for $1 million. You don't realize that you owe that money back. It's not a uh, payment in, oh, that's all good. Next item. It is an advance against revenue. And the way that works is you extract things that give you $1 million. It's supposed to pay for productions of your albums and your videos and your business expenses. Oftentimes, people go stark raving mad and start spending money on stuff. Cars for their friends and jewelry and travel and all of that. And then they run out of money, and they go back and they may ask for some more, and they think they're getting some more money in payment. You're really just increasing your internal credit line. And the way that the record company gets that back is they've got a contract with you in this example, and his example was 70-30. He thought that was a really great deal. Some artists are 80-20, some artists are 95-5, meaning the record company in this example, and don't get mad at them. Business is a capitalism is just a it's just not emotional. Business is a gladiator sport. It's a non-emotional situation. It's not meant for it to be personal. It is what it is. So uh, again, be careful of the contracts that you sign. But in fair exchange is no robbery. So in this example, he owned 30% of his revenue. They owned 70% of every dollar that was made until he paid the advance back. Let's use $1 million as an easy number. So they got for every dollar of new album sales, to make this easy, the record company got 70 cents and he got 30 cents, or paid back at the rate of the deal, which means that out of his 30 cents, the $1 million he was advanced gets paid back. And he keeps paying that $1 million back from his 30% while the record company's getting their 70% until he repays the $1 million in total, in which case he then starts recouping 30% to his pocket, paid back at the rate of the deal, which means that the record company, the financier, the venture capitalist, the one who's backing you here, the one who's taking the most risk, may earn $1 million before you even get your first cents of your 30 cents. In fact, they will make earn $1 million. They're going to earn they're going to get their $1 million back, but they may earn another $1 million or $700,000, or it depends on how this gets calculated. But um, they may earn $1 million back on top of your your million that you reimbursed them before you make a dime, because they're making a 70-30 split. It's actually They can actually do better than that in that example. And fair exchange is no robbery. So just watch the contracts you sign, because if it's a 95-5 contract, which some artists do sign, I mean, that's really painful. They make 95 cents of every dollar that comes in. You make 5 cents, and you're going to pay them out of your 5 cents the $1 million back, right? And yeah, we don't want to do that calculation. So let's get into the positives here, because these contracts don't have to be ankles around your uh, weights around your ankle, or and some kind of a negative situation. They can be quite empowering. They've been for me in most of my business experience, but actually I've had some bad experiences too. I've written some bad contracts. I've had some bad agreements. I've had run-ins with the IRS and franchise tax board in California. We'll get into that. Um, but let's talk about contracts and taxes as a foundation for your financial success. Let's now start with my own personal story. And I described this in my book, Financial Literacy for All, which is a bestseller. Been a bestseller for the last year. I encourage you to go get your copy. And when I was in business, I wasn't paying attention to paying taxes, because my view was the company wasn't making money. So why should I worry about it? And I'll worry about it when I become profitable. I actually made two mistakes. I hadn't filed personal tax returns for about 6 years in a row. Yes, me. This is in my teens. I was homeless during the time I was homeless for 6 months of my life. So I guess you'll understand some of that. I was just rolling really fast, trying to hustle. You can all relate to that. But no excuses. I should have filed my taxes. Well, that wasn't the worst part. The fact that I hadn't paid my taxes, because that was not, I hadn't filed taxes. So I didn't owe any taxes, but I hadn't filed them. So once I did file them, um, I owed penalties. And uh, the IRS is extraordinarily punitive lender. So you want to owe money to anybody but the IRS. Um, and they didn't come after me. They didn't threaten me. I was a small fish, not making a lot of money at the time. But I finally filed them all at one time. Before they came to me, I came to them, which I'm encouraging you to do. And I just paid the penalty through a payment agreement over time. The way they hit me was later on, when I was making a little money through the business. Well, the business was not profitable. I had a lot of cash flowing through the business. And I had employees I was paying. I was not paying withholdings out of the employee's paycheck. So when your employees are a W-2 employee, they're a salaried or hourly employee, you've got to pay withholdings out of that. Well, again, I figured the business wasn't profitable. I wasn't profitable. Why should I do that? I just write them a straight check for what I owe them. The franchise tax board, the state of California, got wind of that, and they literally put up a cash register in my lobby, and they wanted their pound of flesh. They would take every receipt, every check that came in that front door, until they got they paid back the taxes plus the penalties and interest that I owed them from the uh, employee withholdings that I stole from them. I didn't steal it, but I borrowed it, and it was very painful. I mean, we're talking about, it was, as I recall, about $40,000 in total, and back then that was a death knell for me, and I had to hustle and take care of them and take care of my responsibilities at the same time. And I learned a very valuable lesson from that experience, those two experiences, which is just treat the IRS as your business partner and file your tax returns. the look, you cannot run your life without with this whole country runs on taxes being paid. Your police are being paid by taxes. Your schools are being paid by taxes. Your the roads and gutters and the maintenance, the building of bridges, um, uh, street lights, sanitation services. Um, I mean, all the infrastructure for the city you live in and the country you live in is paid through taxes. Or as to make this really plain, uh, even if you want to distribute money like a socialist, you have to first collect it like a capitalist. All this is connected, and folks say, "Well, I don't, I don't want to be a capitalist. I want to work for a nonprofit." Well, nonprofits' money comes from, in this case, the government, and the government um, gets that money from taxes. Or if you get your money from charitable contributions from wealthy individuals, those individuals are getting a tax break because they're making a charitable contribution to you, which affects, hello, their taxes. Al Capone, the famed gangster, did not get taken into prison, arrested, and then put ultimately into prison because of rape, murder, mayhem, all of which he on some level was guilty of, but was never convicted, indicted, but never convicted. He just got away with it all. But when the IRS came up to him when the federal government came up to him for tax evasion, boom! Like they're like the government was gangster. They're like, you can make all this money illegally if you want to, and we can't prove you made it legally, but your lifestyle is such that you can't do that without making X kind of money, and you didn't pay taxes on that. So it's ill-gotten gains. We want our share, and they locked him up, and he died uh, a very painful death. Um, After that, it was over. So pay your taxes. So you're going to understand the basics of contracts and taxes. You're going to learn how to protect yourselves from unscrupulous people and protect your businesses. You're going to get best practices for wealth safety uh, and, well, building wealth safely and legally, and sustaining it, retaining it. Okay, so a contract is just simply an agreement, right? Just start with the basics. Contract is simply an agreement, but it's only as good as its enforceability, and it's only as good as the people. Uh, I might also add who are signing the contracts. If you have two unethical people on two sides of a signing of a contract, the contract is useless because it's only as good as the full faith and credibility of the people signing it. But let's assume the people are honorable. Every major deal, partnership or investment should have a contract. I love limited liability contracts. LLCs are simple, they're elegant, and they're easy for anybody to understand. I have a ton of LLC agreements. When I had the Promise Homes Company, I since sold most of the company, but when I had that company, we had just, I mean, I think it was hundreds of LLC agreements. The ideal situation, we own 700 homes, just under that. The ideal situation, which would have been to have each one of the 700 homes in its own limited liability corporation, its own LLC. I think we bought the homes in bunches, so we would have a group of homes in one limited liability corporation. So if somebody tripped, fell, faked a injury or whatever on a house, or wanted to sue because they realized I owned it or whatever, you could only sue the asset or assets that were in that bucket of assets in that LLC, limited liability corporation. You couldn't punch through the LLC and get to me or my family or my other companies or all that kind of stuff, um, because you're greedy and unethical. So um, in that situation, I'm not suggesting somebody's greedy and unethical. But limited liability for LLCs really help in that regard. So key contract clauses and what they mean. Payment terms. Avoid uh, getting paid late or being paid not at all by having payment terms. What's the scope of work? It prevents misunderstandings about the responsibilities that you have in a contract or someone else. What's a termination clause? is what happens if things don't work out in an agreement. So how do you basically how you get out of the agreement? By the way, I'm gonna just throw one in here. In perpetuity, right? That means that I love that phrase. I was with Cam and Cam Newton, the NFL star. We did a podcast together on his show, Funky Fridays. You'll be hearing that soon. And it was a great interview with him. He's a great guy. And he learned the phrase in his contract negotiations in perpetuity, in negotiating on his media company after his career. He learned that lesson and it stuck in his head. That means it goes on forever, right? Whatever you're signing in perpetuity means you're giving rights forever in perpetuity. These things really matter. What's a non compete in confidentiality? It's protecting your ideas and your businesses, essentially. Um, a non-compete agreement and a confidentiality agreement. Let me talk to you about a lesson I learned in a contract. I had done a deal with, well, let me tell you a bad situation first, and then I'll tell you a good one. So when I was coming up in business, Bryant Group Companies, I believe it was I forget the name of the entity. I think it was Bryant Group Companies and WTC Funding Corporation. I was like 19, 20, 21 years old when I ran this business in LA, Los Angeles. And we were in an office building, the Westwood Gateway complex at Santa Monica in La Cienega. And my assistant, now my chief of staff, Rachel Doff, I'd ask her to go downstairs every day pretty much and get myself a sandwich or whatever. And I would just work through lunch. And I was so focused on working and hustling and whatever that I created my own terms for how I was going to pay that bill, I guess. And I had failed to pay the cafe bill downstairs. It wasn't much. It was 800 bucks or something. But even worse, and that guy sued me. I've not been sued by anything important, like no big, no anything important. I'm taking care of all my big deals, all mortgages, contracts. My credit score is like cool. It's all cool. But this one situation, these small ones, I let these things slip. I didn't sign. I didn't have a contract with the cafe owner. They let me slide basically on having an informal situation, and they took me to court, small claims court, and it was very easy for them to get a judgment against me. In that case, I didn't show up. So the judge just hit me with a default judgment. It was a default judgment because you I didn't show up. So if you don't show up for court, you will get a default judgment against you. And it's very painful because it's a one-sided conversation and you can't argue about it. And I ended up owing this guy. It wasn't a lot much. It was, $800,000. But back then it was a lot of money for me. And the more painful ones, I had a guy, Jimmy was his name, and it was Jimmy's Car Detailing. I remember Jimmy, and Jimmy would wash my car. It was a Mercedes, I think 420 SEL, and I love the car. And he would wash the car once a week. And Jimmy had a contract. Jimmy didn't have a high school education, right? Jimmy didn't have good teeth, but Jimmy had good sense. And Jimmy on his bill that I or my assistant would sign every time he finished washing a car, we'd sign an invoice. It said at the bottom 10% fee compounded with penalties for all unpaid balances. Where this whole thing was an unpaid balance, and this dude ultimately took me to court. I thought he was a friend. And he was like, "No, I'm your businessman," or as Jay Z would say, "I'm not a businessman. I'm a business man." And homeboy with no teeth, no toofuses, who I thought was my buddy, who was washing my car, and returning back to the hood while I was at Westwood Gateway Complex in West LA in that marble office building, trying to be important. He took me to court and won because he had contract agreement with me and I didn't pay attention. And he was right. He had my signature on all these invoices, and it said clear as day that I would pay a 10% fee on the unpaid balance. It was all an unpaid balance, and I'd pay penalties and interest on top of that. I had no choice but to pay him, and I was honored to do it. He earned it all, and I actually felt very bad about it. Lesson learned. Later on, in later on meaning like recently, I signed recently, last 10 years. I signed a major contract with a couple friends to start a business, and it was a general partnership, and I had a majority of ownership, and my two partners, investors, had they own 40% and I own 60%. And there was different kinds of shares. I had essentially common shares and they had preferred shares. And it is what it sounds like. Their shares were preferred, had a preferred position and a preferred in rights, right? Than my shares. My common shares were, as it sounds, common. And like I didn't have common sense to pay attention to this. It turned out just fine, by the way. These are great guys. But I assumed because I owned 60% of the company that that just meant I had a majority vote, a majority view. I'd run it the way I want to. And I was naive because these were the money guys and they knew what the heck they were talking about. I was a thousandaire, but they were billionaires, or at least 100 millionaires. And well, I wasn't a thousandaire, but you get the point. Uh, I was outmatched on the finance understanding side of this equation. These guys were geniuses and in what they do. And even though I own the majority, their attorney explained to me one day when I was pushing a narrative, pushing what I wanted to do, John, you own a majority of the ownership, but they control a majority of the company through their preferred shares. I'm going to go off on a tangent here. Just trying to tell you, there are things like there's there's poison pills you can put in a stock agreement. Like I believe Mark Zuckerberg, who I know at Facebook now, Meta, has a poison pill that no matter how much the stock gets diluted, he controls the company. There are founders who put these poison pills in there. I don't know that to be the absolute case from Meta, but I'm pretty sure it is. These contracts where they found a company and they will structure it through the governance agreement, the and the rights where their stock has outsized weight to other shareholders, irrespective of how much they get diluted. Diluted means it's diluted is the opposite of concentrated. Concentrated is strong and rigid and intense, and diluted is what it sounds like. You dilute a drink at a club, you know what that means, right? They gave you some cheap drink. You dilute your interest, you have less power. So, so that's an aside. If you want me to go into that, put that in comments when you see this on online when this gets published, and I'm happy to go into greater detail and explain what the poison pills and all that kind of means and stands for. But I want to get to a lot of content here in a very short period of time. So back to the basic premise that um, I had basically synthetic equity at common shares, and they had preferred shares with rights and privileges that were brilliantly crafted. And they didn't do me no wrong. I saw it was all there for me to view. I was casual about it because I knew them, and although I probably wouldn't have changed much actually. But the attorney explained to me because they put up the money, they had more rights, and they were right. And so I could not just do as I like. We ended up working it out where I did as I preferred, but I had to consult with my partners. I did not have the contractual right to do that. They had to give me the right to do that. And over time, as I proved myself, they loosened the grip um, on the contractual rights. And at the end of the term, at the end of the day, I was actually running it exactly the way I wanted to. But I honored my agreement with my partners, and they left that deal very happy. Let me tell you about negotiations, which is not part of a contract per se, but if you leave a every good negotiation means you leave the negotiation, but everybody in it leaves slightly irritated. Okay, if you have a good negotiation, you leave the table, everybody slightly irritated, slightly annoyed because no one got everything they wanted, but you got what you needed. Let me tell you some high profile entertainers and athletes who signed bad contracts. Some examples. There's the group TLC, love their music. They signed an unfair deal, or some people might call an unfair deal with LaFace Records. Now, I'm saying this in particular because there's a lot of people running around talking about my Jewish brothers and sisters and how somehow they've ruined the music business. And I don't know why people are picking on Jews. There are black people. This is LaFace Records. There's Motown Records. There's a bunch of black people in music. There's a bunch of white people in music. There's a bunch of Asian people in music. A bunch of Latino. Everybody's in music. I don't know why they're picking on one group, but it's just wrong to point out that, oh, this contract is unethical. No, the contract is a legal contract. You just don't like it because you don't like the terms and how they got better negotiation than you, because they are paying attention to the dollars and you're paying attention to the music notes. And in this one example, it's LaFace Records. So we need to like knock that off. Like we need to stop all this haterade and, you know, hate is hate. We just need to stop it. We need to stop blaming people because they're successful or more successful for us. Maybe we're jealous or maybe we don't understand. Don't hate somebody. Try to learn from somebody. Try to understand how they've mastered the game, and you can master it too. They want to be a great singer or a great dancer in this example, and you are a great whatever ball player, whatever, and you want to be a better business person. Michael Jordan, not Michael Jordan, Magic Johnson used to use his celebrity status to go approach the folks on the front row of the basketball games at the Lakers and go to lunch with them. These were the people who bought the best seats, and he wanted to trade lunch for business knowledge. Really smart. What is Magic Johnson today? Not just an NBA great, he's a great businessman. So TLC signed a bad deal with LaFace Records. They thought it was a bad deal. I wasn't in it. I'm sure LaFace Records thought it was a great deal when they wrote it. And I'm sure they'd say, well, the people didn't pay attention, just like everybody else would say, people didn't pay attention. And there, by the way, in a negotiation, the table is the bartering place, and one person is trying to extract as much from you as they can while paying you the least, right? That's their job. The other person's job is to give you the least the 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 least value and while getting the most money. So the both folks in that example are getting what are doing their job. One person's trying to extract while giving you the least. The other person is trying to give you the least while getting the most. And that is called a negotiation. Hello. So capitalism is a gladiator sport, as I said. Don't take it personal. It's just business. Don't get mad. Just get smart. And so with this LaFace deal, they paid them only a fraction of album sales. So the lesson here is always understand your royalty structure and seek legal advice before signing a contract. Don't be cheap and don't think that contracts don't matter. Contracts absolutely do matter. And I don't want you finding out the wrong way that they matter the most in these situations. This, again, it's the music business in this example. Megan Thee Stallion filed a legal battle with 1501 Entertainment over a restrictive contract. The lesson here is a new artist should get an independent legal counsel, not just a label provided lawyer. So if the lawyer they're giving you is from the label, they probably have an interest. Or as my friend President Bill Clinton would say, it's hard to get somebody to agree to the truth when the lie is paying their paycheck. Hello. I'll repeat that again. President Bill Clinton said, it's hard to get someone to agree to the truth when the lie is paying their paycheck. Or as I would say, to rationalize is to tell rational lies. So if you are getting paid by the record label to be an attorney, guess whose interests you're most interested in? It's not the artist that you're on the in the room with. It's the person that you're aligned with. I did a deal recently where, and I knew what was going on. I did a deal recently where I had contracts. I let my partner draw up contracts, and it was sort of two against one, so to speak. And I knew that the contract would be imbalanced, as I would say. But I made sure the things that were most important to me were handled, and I let them get away with the things that were less important to me because I didn't want to win the battle and lose the war. The spirit of that partnership and where we were going next was more important to me than fighting over the details that they were fighting over. That's another conversation. That's a more sophisticated situation. In order to play that game, you got to know the game you're playing. It's got to be chess and not, some people are playing chess, some people are playing checkers. I'm playing chess. Lil Wayne, he struggled with the Cash Money Records deal for years. The lesson was always have an exit clause and dispute resolution terms in your contract. It's easy to get married, it's hard to get divorced. Scottie Pippen, the NBA, signed a long term deal with the Chicago Bulls that severely undervalued him in his opinion. I sort of agree. But again, it's just business. It's not the Chicago Bulls' job to pay you top dollar, pay you every dollar they can pay you. Their job is not to give you to empty their pockets to give you everything they got. Their job is to give you as least that they can get away with getting you without having you be unhappy. So what's the lesson here? Consider how contracts evolve over time, and inflation is a factor in a long-term contract, and consider all that before locking in long-term deal terms. You can do contracts in phases, or have them have renewal clauses, and have sort of check-in points in a contract. So the best practice for smart contracting: get it in writing. A handshake is not a contract. Hello, hello, hello. People are like, I don't remember that. Do you remember that? I don't know. I don't know. People get amnesia when they don't like a situation, right? uh, and read before you sign. What is the fine print? And if you don't like fine print, get somebody with glasses who's an accountant and a lawyer who love fine print. By the way, your accountant, your lawyer should not be at the club hanging out with you. People, if folks, if your professionals are hanging out with you at the club, they may be the wrong people. You want boring people. You want people who don't want to go to bed at 8 o'clock at 10 o'clock at night, right? You don't want people out whose evening starts at 1 in the morning talking about they're your attorney, they're your lawyer, they're your accountant. That is just not my suggestion. You want left brain analytical people who are absolutely as obsessed with accounting and numbers and all that stuff as you're obsessed with music and notes and all that stuff if you're in the music business. So the fine print is really, really important. They can get you on the fine print. Somebody can get you on the interpretation of 5 words that look common sense to you, but an attorney will understand, that gets, that needs to be that needs to be treated in a very special way, but only an attorney would know that. Hire an attorney when it's serious. Don't do a DIY contract when the stakes are high. In other words, don't do a do-it-yourself contract when the stakes are high. Let me go on to YouTube talking about I'm a lawyer now because I watched a YouTube video. You get clocked. Um, uh, so common mistakes that can cost you: not defining clear payment terms, signing something without understanding all the terms. This is a common mistake in the music business. Not having a contract at all. Verbal agreements equal risk. Okay, how to play the game and win, right? Um, and let's now talk about the tax system. Um, uh, Tax laws favor business owners and investors over employees. Uh, it's just the way a TI is. Business owners like me and investors have lobbyists, right? And they spend a lot of time in Washington D.C. trying to get terms that benefit them. So don't get mad at the game. Just understand it. But also, business owners and investors take more risks than employees. So there you go. And an employee has a W-2 relationship. So the chances and sort of taxes are sort of predefined in that situation. So as long as you understand it, you should be okay. It's more dynamic for a business owner or entrepreneur like me. But understanding your tax strategy can help uh, you legally and contractually more than you can truly appreciate. For instance, Warren Buffett said uh, famously, "I pay my secretary pays more taxes than I do." People got all upset about that. Well, it's true because Warren Buffett is not a W-2 employee, meaning he doesn't take a salary he doesn't take a paycheck. He doesn't If you don't have a paycheck every week, every month, then you don't have taxes taken out of it. His secretary was a W-2 employee. Warren Buffett was um, compensated through capital gains. When he sold stock, when he sold a business, when he liquidated a business, then he got a capital gains tax obligation. And the taxes from W-2s are 30%, 35%, 40%, 50% sometimes, depending on federal, state taxes, and so on and so forth. But capital gains taxes is 21%, 20%, depending on where you are. Hello. So I love capital gains. And that's what happens when you take more risk and you You sell some real estate, you sell a business, or you sell some stock. That's a capital gain, a gain on your capital. It's a different tax structure. So Warren Buffett paid a crap load of taxes. He didn't pay any income tax. He paid capital gains tax. He didn't pay traditional income tax. Most of the taxes actually paid in this country are paid by the wealthy. So anybody, no need to hate on the wealthy. Y'all not paying your taxes. They do. I guess we do, pay the majority of taxes in this country. So feel good about that. It's just a different kind of taxes. Maybe I'll come do another. If you want me to do another video on this, sorry, another podcast on this to go deeper, I will be happy to. Just tell me in the comments when you see this on a video roll or on a social media clip, and I'll be happy to take note of that. Let me tell you some high profile entertainers and athletes who struggled with taxes. Wesley Snipes, an actor, served time, federal time for tax evasion. Yes, went to prison. The movie star. What's the lesson? Always file your taxes, even if you dispute the amount. A friend of mine called me recently because he was about to have his taxes, his income tax, his income, his paycheck um, uh, taken from him because the federal government had reached in his bank, with his employer, and garnished it. And he was days away from having a paycheck go from you know $20,000 or $10,000, whatever it was, down to literally $150. He told me, and I was able to make a phone call, get him connected with some folks, and he was able to make payment arrangements with the IRS. And they don't want you to go to prison. They don't want to take your money. They want their money. So they made a payment arrangements, and it was again fair exchange is no robbery. Both people walked away slightly irritated but happy. Um, some entertainers, some creative people don't think that taxes are legal or whatever. Look, don't make that. ah, don't do that. Don't do that. Don't start fighting with the federal government after you made a lot of money. Talking about the federal government's not real. Tax structure is not real. No, no, no. That's a philosophical argument. You will lose it. Right. Again, I'd rather owe money to my mother, God rest her soul, than the federal government. Pay your taxes, file your returns. If you want to then fight a legal battle or a philosophical battle separate from that, knock yourself out, but not after you owe some money, after you made some money, and then you decide you don't want to pay it. That is a bad move. Lauren Hill, the singer, went to prison for unpaid taxes. Did you hear me? Hello, hello. Yeah, Lauren Hill and Wesley Snipes went to prison for unpaid taxes. Lesson: never ignore IRS notices. Work out a payment plan if needed. Give them the respect of a partner, of a general partner. Allen Iverson, NBA star, blew through millions but was saved by a trust fund. Lesson: set aside money for taxes and long term security. Fat Joe, the rapper, faced jail time for failing to pay millions in taxes. Lesson: have a trusted CPA or tax attorney to keep you compliant. I have a tax pro here in Atlanta, one of the big four firms here in Atlanta, big six firms, Aprio. I use them. I think they're fantastic. And I have a, let me see, I have a accountant, I have a bookkeeper, I have a controller, I have a chief financial officer, I have an auditor, and I have a chief accountant, outside accountant. Then I have an auditor. Um, all have different functions. I make sure that I make sure to make that money is straight. I was born at night, not last night. You're not gonna catch me slipping if I can at all avoid it. And when you pay your taxes, by the way, you pay attention to public services. I paid $800,000 in state taxes 1 year in Georgia. Yes, the federal tax bill was much larger, and drove down the street and ran over a pothole. Do you know I would like went back home and wrote a letter to the mayor and the city council people and the county officials and the state transportation officials and the governor's office. Hey, you need to fix these potholes like immediately. Like I just paid $800,000 in the state taxes. That's literally my business, right? Did you know they paid it? They paid it. Do you know they filled that pothole in quick? I'm a taxpayer, and conversely, nobody washes rental cars. Hello, If you drive a rental car around, you don't own it, what do? You drive it until the wheels fall off. The dirty as all get up. After 2 weeks, take it back. It's filthy. You can be a saint and you don't wash the car. It's a rare person that washes a rental car because you don't own it. There is something that happens when you own own something. When you own a house, it's amazing that when you rent the house, the lawn is up to your eyeballs. But when you own the house, well, the lawn gets cut somehow. DMX the rapper, he owed millions to the IRS. Lesson: taxes are not optional. If you earn money, plan for what you owe. Understanding the basics: income tax versus capital gains tax. Um, so, as I've said, investments are taxed differently, and you're taking more risk. It's it's a more complicated explanation, but essentially, capital gains is a better deal. If you ever get to a point where you're taking risk. You lose everything. There's no guarantee with a cap with an investment that's going to pay off, and you're not getting a regular paycheck. So the American capitalist system rewards you a little bit by charging you a reduced tax amount. Um, but it's still a lot of money if you're talking about over $1 million, talking about 10, 20, $50 million. 20% is a lot of money, right? Write-offs and deductions. The government wants businesses to reinvest. So use that to your advantage. If you have a business expense, a proper, legitimate business expense, you can write it off. Check with your tax pro on what those look like. Talk to my Hope Financial coaches. They'll walk you through that. I'm going to just take a moment here to talk about earned income tax credit. If you have a tax pro or if you don't, I want you to look into the income tax credit. I've said this a million times. I'll say it again now. You make less than $65,000 a year. The government owes you a check for working. It's not a handout. It's a bonus for working. Um, you get a bonus on Wall Street from your employer. At the end of after a good year, you get a bonus from the government. This is bipartisan legislation. It's been around since the 70s, I believe. It's the Earned Income Tax Credit. It's EITC. $20 billion goes back to the federal government every year because we don't ask for the money that we're owed. Hook you up with some free games. Jay-Z would say, I'm giving you $1 million worth of game for $9.99. This is no 99 because you're not even paying for the subscription to this podcast. Um, so if you're making less than $65,000 a year and you earn money legitimately, the government owes you a check. Now, I'm going to do a sweet spot here. You make $38,000 a year, you have three children. The government owes you approximately $6,500, $7,500, give or take. And if you never file for EITC, if you have no idea what I'm talking about, congratulations, it's retroactive for 3 years. So if you make $38,000 a year and you get a check for three times $7,000, just do an average. That's about, give or take, $20,000. That's more money than you'd ever see at one time in your life. Pay off your car note, pay down your credit cards to pay them off, put a down payment on a house, start a business, start an investment account. There's no restrictions on the money. It's your money. And it's not a tax break, it's a check. You get it wired to you when you modify or file your tax returns. And this is transformational in your life. So check with my people at Operation Hope about the earned income tax credit. Back to understanding the basics. LLCs, S corps, and 1099 income. And by the way, I talk about corporate entities on my season one podcast for money and wealth. So go back and watch or listen to that podcast. Structuring yourself properly to minimize taxes is tied to which kind of entity you select. So limited liability corporations, an S corp, or C corp, all these different corporations, and 1099 income, which is contract income versus W-2 income, which is salaried former employee income. Oh, I'm not going too fast. I'm just covering a lot of time I almost said it 999. I would try to wrap like Jay-Z in one podcast, try to get a lot in an hour. I said it was gonna be 45 minutes, but this is gonna go over a little bit so I can cover everything. Um, keep your records. This is top tax strategies for individuals and entrepreneurs. Keep receipts and track expenses, right? Um, this is why bookkeeping really matters, right? Um, and understanding proper terms. My people at Operation Hope can help you with this. I remember it was a farmer drug dealer who came to Operation Hope starting a restaurant. And he'd already bought the restaurant equipment, at least the building, all this stuff. And he came to us for some business coaching. And I ran into him and I said, "Well, can you show me your balance sheet?" And he said, "What's that?" He was a smart guy, but no one ever taught him the basics about a balance sheet, an income statement, a net worth statement, a budget. Everybody needs a budget. I have a budget. Everybody needs a budget. That's a different podcast for another day. I'll go through budgets for you. By the way, tell me the topics that you want me to break down, and I'll be happy to break those down too. Keep receipts and track expenses. Use business deductions wisely. What the I use Basically get only what the IRS allows. If you overreach, if you play games, the IRS is going to slap you upside the head and it won't be nice and they're going to hit you with penalties. So just use proper business deductions. By the way, if you have an office in your house, as I do, you can deduct expenses tied to that office. Hello, but we'll talk to your tax pro about that. You can't deduct the whole house, just the part that you use for business. Plan for tax payments. Avoid the April surprise by setting aside money quarterly, or at least have a plan for how you're going to pay these taxes or work out a payment arrangement, but just don't ignore it. Common tax pitfalls and how to avoid them. Not filing taxes on time is just again, that was my mistake. And penalties add up fast. I mean, the IRS charges an incredible, excruciating amount of interest because they don't want you owing them money. They want you to get out of debt from them as soon as you can, as fast as you can. They don't care who you are. One of my famous friends, I won't mention his name, but he called me and he had this problem with the IRS and he was a household name. And I called for him and got him connected with people. And it took months to get that situated. There was this lady who made, I don't know, $62,000 a year, who was completely in control of this guy's life. And she didn't care for his confidence. And she made it extraordinarily painful for him. But she was in charge of everything. We finally got her moved out of the way after months and months and months. But this guy couldn't sleep for a while because she basically she could have ruined his whole life. And so, you know, just do it right the first time. So file on time. Mixing personal and business expenses, a no-no. Get separate accounts for business, separate accounts for personal, in my opinion. Ignoring tax planning, another no-no. The wealthy use tax strategies before tax season, not after, including me. I'm working on my tax strategy all year round. Um, Here's some takeaways. Contracts are about clarity and protection. Never enter a business or financial agreement without a contract. Someone in my life, a loved one, wanted to borrow some money recently for a business. People in my family know not to come John Bryant sideways asking for money. I covered this with Cam again, Cam Newton, and when I was with him on my podcast with him, we had a lot of fun together, talking about family coming at us, asking us crazy stuff. People don't come to me asking crazy stuff anymore because they know I'm going to respond. So they're prepared. So somebody had a business idea and they knew the revenue was coming in, so they knew they could say, "Hey, this money, this check's coming in. It's just delayed. Can you basically factor this? Can you, as they call it, factoring? Can you bridge this for me?" So I gave them a small loan, and they were going to pay me back in 30 days. They signed a contract. It was a simple contract, one pager, but they signed it. And I know these people very well. I love them, but this is business. And they needed a 30-day extension, which I gave them, but I got my money. Hello. People get amnesia, particularly when you know them. They're really nice when they want to borrow the money. When you want it back, what you sweating me about that for? Because it's my money and you want it. You weren't paying, you didn't have an attitude when you borrowed the money from me, right? People funny. Okay. Taxes are part of the game, people. Learn how to play it legally and to maximize your wealth. Be proactive, not reactive. By the way, I had one investment that wasn't paying off for me the way I thought. And I was sort of upset about that until those losses from that investment help to defer a tax obligation, turn a tax obligation to a tax refund. So even though I lost money on the business on revenue, there's two ways to make money: make more or spend less. And again, once you gain some wealth, gain some traction, you're going to have a tax obligation every year, and legitimate business expenses and legitimate tax write-offs all qualify. You have a commercial real estate building. This doesn't work for your primary residence, but commercial real estate, as an example, or income producing real estate, you can have depreciation, which is a tax write-off, a tax benefit. Anyway, I want you to learn all this stuff, but step by step. Be proactive, not reactive. A smart contract and tax strategies can save you money, stress, and legal trouble and jail time. Wealth is not just about making money, it's about keeping it and protecting it. Take a step today, review a contract you've got, talk to a tax professional that you know, find a pro, build a team, right? And set up a financial system for your future. Like get Quicken or QuickBooks, or get a Excel spreadsheet or money. I think Apple calls it iOS calls theirs money or numbers. I think they call it numbers, which is the and Mac and Microsoft calls it Excel. Use a spreadsheet or use a financial app. There's no excuse in this technology world not to get it right, right? Um, and I want you to follow me on Money and Wealth, and tell your friends to do the same and get the book Financial Literacy for All, and tell go to Operation Hope and tell them I sent you. They'll give you Because I sent you, they'll give you a $1,000 financial coaching scholarship at Operation Hope, good for a year, to help you get through your credit score and get through your initial budgeting, and review where you are on all your books and your records, and talk to them about taxes, and talk to them about your contracting, and go and then from there you might graduate to our business courses, and a more detailed uh, um, financial coaching opportunity through Operational. But we're going to give you this $1,000 scholarship on me for coaching and counseling. That's the value of because you listen to Money and Wealth. And you're part of the civil rights movement, from civil rights to civil rights, from the streets to cutting deals in the suites, from protesting in the suites to getting a seat in the business suite. This is the new movement. This is real world um, transformational change, because you're getting game. You are gaining your financial literacy, which I believe is a civil rights issue of this generation. Actually, I think it's a civil rights issue of this generation. I think that AI literacy is a civil rights issue of this generation. And I want you to follow all of Operation Hope's work, follow all of John Hope Bryant, my work on all accounts, get the book Financial Literacy for All. Tell your friends to listen to this podcast, have a meeting with your friends, have a meeting with your family on contract. By the way, I hate to break this to you, but marriage is a form of a contract. You don't think it's a contract? Try to get divorced and see what happens, right? and And California is a community property state, which is different from Georgia. That's a fairness state, and you got to know all this stuff, because it affects you. Like seriously, I was talking to Cam Newton, and he was like, "Do you realize that when you're working for the NFL, you're an employee. You're a W-2 employee, so you can't be signing no talking about I want to just pay me and pay my LLC, and I'll pay my own taxes. You are an employee. They're giving you health benefits, and they're taking the entrepreneurial risk, and you pay taxes per game, per city, per state." If you're in the NFL. Now get that one. All right, this is Dropping the Mic with John Hope Bryant. I hope you love the light. I hope you saw the light. I hope that you get some light and don't think light and think lightly of this and end up having to stare down the desk of an IRS agent who is not so friendly. I want you, or a legal contractor or a court, because you didn't pay attention to a contract you signed, or arguing with somebody over who got you good because they paid attention to a contract and you didn't. And again, don't be emotional about this. This is just business. Capitalism is a gladiator sport, and you can master it. You've been doing so much with so little for so long. You can almost do anything with nothing. God made you to succeed. He made you great. Now, go find your greatness. This is John Hope Bryant, and this has been Money and Wealth.